So many people come to us and kind of step one is, I have no idea what I can afford, what price point I should be looking at.
I don't think people understand that, when somebody has to personally guarantee or when they don't.
But it's so important that when you're working with a lender, ask them 1,000 questions. Make sure that they know their stuff, right? It kind of
Right.
seems basic, but a good SBA lender can honestly be the difference between getting a deal approved and potentially getting a deal declined, right?
There's some lenders that they claim to be SBA, but they're not preferred.
Sure.
So they try and put a square peg in a round hole, and by that time, it's pushing the whole deal down the road.
Yeah.
And it gets very frustrating for sellers, for buyers, for everyone in place. So
I would say this is one of my biggest do's, which is welcome to SBA University. I've got another guest professor, Audrey Wendel from T Bank, a fellow longtime SBA lender.
Yeah.
Audrey, thanks for coming on the podcast.
you got it.
So I asked a very specific task of you, which was to put together kind of your top 5 do's of people that are looking to buy a business and obviously looking to get an SBA loan. I put my list of 5 together.
Yep.
You put your list of 5 together.
Yeah.
I thought we could compare,
Sure.
kind of throw out each one, and then we can obviously discuss. So
Yeah.
as the guest professor, feel free to kick us off with your first do.
Absolutely. Number one for me is get pre-qualified. To get pre-qualified, we typically get your personal financial statement, get some background information on you, and we discuss what you're going to be looking to get, what kind of businesses you're interested in. Sometimes that is going to require a 10% injection, which we usually see with SBA financing. So we want to make sure, do you have the funds? Do you have the liquidity? Do you have a partner? How are you going to manage that? So once you do that and you have a good understanding of what you need in order to buy a particular business, pre-qualification is the way to go. And usually you can get a buyer letter or something.
Yeah, it's so important. So many people come to us and kind of step one is, I have no idea what I can afford, what price point I should be looking at. So the pre-qualification obviously should set them on a path, right? This is now my budget. And if I
Right.
want to go higher, potentially I need to bring in a partner or raise some capital, right? To help with the equity injection. So it's a great do. Mine's going to be a little bit obvious, right? And maybe a little bit biased. Work with an SBA specialist, a lender that is not only a preferred lender, but is an expert in the program, right? And I like to think individuals like us, this is what we do all day, every day. So we are hyper-focused on the SBA 7A loan program. We're up to date on all the changes, and that can be SBA rule changes. That can be your bank's own credit policies and preferences. But it's so important that when you're working with a lender, ask them 1,000 questions. Make sure that they know their stuff, right? It kind of
Right.
seems basic, but a good SBA lender can honestly be the difference between getting a deal approved and potentially getting a deal declined, right? Because they might have to be providing some misinformation, and that's heartbreaking to go that far down with a lender only to have a deal get declined that potentially could have been approved if you worked with somebody that really knew the program, and could have put you in a really good spot to get that deal done.
Yeah, there's some lenders that they claim to be SBA, but they're not preferred.
Sure.
And so they try and put a square peg in a round hole, and
Yeah.
by that time, it's pushing the whole deal down the road.
Yeah.
And it gets very frustrating for sellers, for buyers, for everyone in place. So
That's a good point because timing matters too, right?
Absolutely.
These deals have expiration dates, and working with a lender that's not really comfortable with the process, maybe didn't tell you to maybe start some process up front, life insurance, business insurance, they can severely delay deals and potentially lose deals because of it. So,
Yeah.
that's my do.
Absolutely. Absolutely. My next do, I would say, is cash flow. Understand your cash flow. What does your cash flow look like? Do you understand what seller discretionary earnings is? What does that mean to your bottom line? How much do you want to get paid? Is it going to throw off enough income for you to not change your lifestyle and to be able to maintain the payments that are required of the loan? So people don't necessarily understand that SDE sometimes can get misconstrued. So just make sure you have a good understanding of how it works and what you need for just be able to make the payments and also be able to maintain your lifestyle.
Yeah, super important. I mean, it's the 7A loan is a cash flow loan program. If it doesn't cash flow, it doesn't work. And you're obviously taking on a loan to buy this business. You have to make sure that you got enough money to pay back the loan. But then, like you mentioned, pay yourself, right? You've got living expenses. And so understanding the cash flow, and again, kind of going back to my last do, right? Work with an experienced lender who can help kind of sift through the financials with you and try to get you the most accurate picture possible of the cash flow.
Right.
All right, my next do, have your financials in order, right? Your personal financial situation is going to be put under a microscope. So make sure, it's as simple as pulling a free credit report, making sure there's nothing on there that you didn't know about, clean that stuff up. Your personal credit report, or I should say your personal credit score, could impact an approval. It could potentially impact your rate. So have those things cleaned up. Look at yourself from an assets and a liability standpoint. You want to make sure that you put yourself in obviously a strong personal financial position. So liquidity is key, right? Don't go out and buy something in cash and drain potentially your liquidity. That's what a
Right.
lender is going to look at. They're going to not make sure not only do you have the money to put down, but that you have post-injection liquidity. No responsible lender should let you go broke buying a business. And so making sure that you have your personal financial situation in order is super important.
Right. I would also state, going back to your credit report,
Yeah.
I always have everybody run their own credit first. Any buyers that come to me, I say, run your own credit. Don't have a bunch of banks running your credit, because that's going to affect your credit score. But it also is enlightening. Sometimes they might find something on there that's going to affect their credit that they can get ahead of, right, before we're pulling the credit report. So I talk about that a lot. And then revolving availability.
Yep.
That also is an indicator.
Sure.
They have to have a good understanding. Well, I noticed that your revolving availability is so low. What's going on? Might be a one-time situation where they ran everything through with their credit card, but they plan to pay it off. Just discussion points.
Yeah. And high credit card debt, even though, to you might not seem like a problem, but it's high interest rate debt. If you've got maxed out credit cards, then it comes to a character thing, right? Are you responsibly spending your money? And so little things like that, you can get that stuff cleaned up. Again, it's all about presenting the strongest application possible.
Agreed. All right, my next due. I would say my next due has to do with my last due, which is SDE. What I want to bring up about that is add backs. So when we see a loan that comes over, we see a SIM and we see what the net income is, and then we go, oh, we have a $500,000 SDE based off $200,000 of net income. Where did that come from? So it is nice to know what these add backs are. Is it something to add back? Is it something you will be recurring? People run their autos through, they run things. Well, you might be running your auto through. Are you going to have your insurance covered? Great. Well, why are you adding it back if you're going to be requiring it as well? So knowing your add backs and seeing what's real and what's not. And then there's other items that you can have or you'll see listed that they're going to need to support. If it's a personal add back, they're running a nanny through, you're going to find this all over the place. But if they can prove that maybe it was a family member, we get a W-2, we can prove it out, great, that's fine. But if we're backing into little add backs to make a deal work, it might not be the best deal.
We don't want to stretch add backs out to make a deal work, because you're going to be hit with some unexpected expenses too, right? There's not this add everything back and that's a true accurate portrayal, right? Because some of those expenses are going to be your expenses, cell phone, meals, travel. You might have to do some travel. You might decide, hey, this person wasn't doing any trips to conferences and weren't doing any marketing, advertising. Those are new expenses, right? So we want to kind of stick with the core add backs, owner's salary. Depending on you as the buyer, you might need to take a salary because you're quitting your job.
Yep.
Or you might have other sources of income and say, hey, I can reinvest, everything that we make back into the business. But that might make a big difference on the cash flow. So the add backs is a key piece. Don't just follow what the broker's math is.
Exactly.
Let's kind of do our own kind of
Don't get
calculation.
fed what this is all about.
Yeah.
Do your diligence.
Exactly. And so another important thing, and I would say this is one of my biggest dues, which is the working capital piece that you can build into an SBA 7A loan, right? So when we do a business acquisition, a key kind of component to that is making sure we're building in enough working capital loan to get you through at least, I say, 2 months worth of operating expenses.
Yep.
You got to keep in mind, you buy a business, the owner takes the cash in the account most of the time. They take, potentially the receivables, if the business has receivables. You are showing up day one. You might have payroll, rent, utilities, need to buy new inventory. All these expenses are going to hit you right away. Super important that you figure out kind of what that working capital number needs to be and build that into the loan. A scenario where we have to skinny the working capital to make a loan work because cash flow is tight is, to me, a disaster waiting to happen.
Absolutely.
So important that we calculate and work with us, the experienced lenders. We'll help you figure out what that number is. We want to make sure we build that out. So do make sure you're building in sufficient working capital that when you take over the business, you won't be stressing out about your bank account and how much cash is sitting in it.
Absolutely. Really great advice. That leads me to my other due with ownership. I don't think people understand that, when somebody has to personally guarantee or when they don't have to personally guarantee. So really the bottom line is if you have an owner that's over 20% ownership or has 20% ownership or more, they're going to guarantee the note. So if you're out finding equity partners, that's great. You can have an equity partner. If they're less than 20% and they haven't already been a part of the business and they're coming in with you, you won't have to get their guarantee. You can just have their equity injection. But that leads to, if they have an equity stake, it has to be true equity. They can't have any repayment on there. There can't be any promise to pay off down the road. It's just basically a full equity position that they're going to get from it. And if it's under that 20%, they won't have to guarantee.
Super important, because you might have some family members, people that are interested in investing, and they want to know, hey, what am I going to have to do if I give you this money and have ownership?
Right.
So understanding that personal guarantee is super important. And what the seller potentially might be staying on, new rule change as of June 1st. Obviously, if you have a seller who's going to be staying on the business post-sale, even if it's 1% owner, they'll have to personally guarantee as well.
That was a big shock to a bunch of people. At the same time, it still works, and they're still getting a huge part of the ownership, or of the sale price. They're going to get that up front. So they might go no, and then they sit there and think about it and go, well, if I have 1%, but I'm getting 99% of my asking price up front. 2 years down the road, you could burn it off if you can prove out the cash flow.
Some business owners might even communicate that they're not ready to completely retire yet. They might want to stick around. The SBA says when you buy out a business, 100%, they got to be gone in 12 months. They can't stick around, and they can only be essentially not an employee. They have to be a consultant, right? So they have to be 1099 paid. Them retaining some ownership allows them to stay on as long as possible, as long as they want to, right?
Right.
And so it kind of takes that burden of a quick transition. And I've always thought that having the owner stick around is great for transition, right? It's kind of instead of when you merge on a highway, right? It's kind of that slow entrance as opposed to trying to take a right turn on a highway.
No, that's a great analogy.
And so,
that's right.
From that standpoint,
that's what it feels like.
Especially if that owner, a lot of times been there for a long time, they know the business, they know the customers, just such an easier transition when there's not that rush for them to leave. So if you can negotiate that, we love it as a bank. The owner sticks around, helps out. Maybe it's not necessary all the time, but obviously a nice thing to add to a credit application if the owner is sticking around in ownership capacity.
Absolutely.
All right, my next due. So SBA loans aren't known to be fast, right? And so my due is expect due diligence, right? There's a reason why these loans aren't quick close, because there's a level of due diligence that a lender has to do, not only to satisfy SBA rules, but just to make sure we're doing a prudent loan, right? We're lending responsibly, verifying financials, right? You hand us a package of financials. Guess what? We're also going to verify through the IRS that those tax returns match, right? We're going to order a business valuation. That can take a couple of weeks. We want to make sure you're offering fair price for that business. Mm-hmm. We're going to make sure that there's no UCC liens against the business you're ready to buy. We make sure all that stuff is clear. If they have a line of credit, if they have some outstanding loans, those things need to be cleared up either before or at closing. Ultimately, we want to make sure when we close, when you sign those documents that says you now own this business, you're getting a business that's represented accurately by the financials, clean of any liens, and is valued, properly. And we've also vetted the employees there, the customers, any irregularities in revenue and profitability. I mean, we're really digging into the numbers. So This stuff takes time. We don't want to rush it. I know we all want to close as quick as possible, but I like to say the due diligence is there to protect you. So just do expect these things that need to be done, and they do take some time.
Well, and it's interesting because everyone wants that magic number.
Yeah.
How long will it be from today? And it's okay, well, what happens between today and the next time I talk to you is I could have asked you for 2 documents and it took you a week and a half to get it to me. Well, now you've just been eating right into our time frame. Yeah. It's an arbitrary number, but we like to stay within our 45 to 6 day window, but there's so many factors. So you have to be prepared to have to bob and weave every once in a while.
Life insurance can take 6 weeks by itself.
Yeah.
So one thing we always advise, talk to your lender about the life insurance amount that will be needed.
Yeah.
Get that started right up front.
Absolutely.
That can delay a closing by a month that you weren't expecting if you wait too long in the process.
That's right. Ask your lender, ask the underwriter, how much am I going to need in insurance for this so I can get started on it? So that way, if you're pre-approved, you get your everything's moving along and we're going to that process, that whole time you could be working on your insurance.
Yep.
So I highly recommend getting that going. All right. So I'd say my last due would be to encourage the buyer to stay involved in the process. We even do that with our team. We make sure that we're on top of things because we need to make sure we get to the end. So don't start pulling back. You need to keep going forward. What can I do? What's missing? How can I help? Let's help each other because we're there advocating for each other, trying to get this done. So stay involved.
Definitely. And a lot of the stuff that drags the process on is just we're asking for something and just how quickly can you get it back to us?
Right.
We can move as fast as you allow us. we're asking for some updated financial information, and it takes a week to get back to us. Well, that's just a week that went by, right? And so instead of closing in 45 days, now we're at 50-something days, right? And so that open communication back and forth, because you have obviously us, the lender, potentially asking for information, from the buyer, from the seller, maybe attorneys are now getting involved. As long as we're all kind of on the same page and we know exactly what is missing and what we need to move forward, things can usually stay on track, right?
Yeah.
We've got a closing date. Help us get there. We all want to get there, right? As lenders, nothing would make us happier than hitting that closing date. So great one. My last do is make sure that you know the transition plan, right? So come up with a transition plan. We'll want to review it, kind of understand what the seller's role is going to be post-close. Do you want them to stick around? A lot of times you're going to want to put something in writing that says, hey, stick around for 3, 6 months, 9 months, depending on the complexity of the business, maybe you want them to stick around for the full 12 months that the SBA allows. You might negotiate some compensation. What does that mean from an hourly or a fixed income standpoint? Obviously, I want to know what the management team is in place there. Just really get a good sense of how that business is going to operate once you take over. It's super important. Understanding the employees, understanding the employee's role. Is there a key employee? Do you potentially want them to have some sort of employment agreement? I mean, those are things that not only are going to help you be successful, but the bank potentially is going to want to see as well. You've got that longtime manager who's been at the company 15 years. See if you can lock that person into an employment agreement, right? We're going to love that and you're going to want that. A worst case scenario, your key employee leaves 2 weeks after you take over the business and potentially goes and wants to do their own thing, right? And so these are the little bits of due diligence, transition plans, post-acquisition plan that we want to see, and we want you to do some due diligence into that as well. So super important.
Yeah, I love when they can get that the key employees locked in 12 to 24 months. That gives you a little bit of relief in knowing that, okay, things are going to stay status quo, at least with the key personnel. We don't want to go in there and disrupt. We want to go ahead and make things process as usual.
Yep, absolutely. So great dues. Those were 10 incredible dues. I think we're going to come back with some don'ts, but
let's do that next time.
Thanks for coming on the podcast.
Thanks for having me.
Until next time, class dismissed. Thank you for watching this episode of SBA University. Hopefully you found this episode helpful. If you need to get a hold of me directly, I'll leave my email address down in the description. Be on the lookout as I will be releasing new lessons every week to help you in your SBA journey. Thanks.